What is going on, traders? Welcome back to the Traveling Trader. So today I wanted to talk about everything Tesla earnings related. As we all know, Tesla earnings are coming up on the 22nd after market, and I believe that if Tesla beats earnings, the stock will soar once again. I will also give you 5 ways to trade Tesla stock during the Tesla earnings event. Please keep in mind, these are just ideas. Do your own research. If you don't know how to trade stocks or options, then I suggest you paper trade first before getting into some of these high risk plays. Now, the plays that I'm going to give you range between high risk and low risk. It's a nice mix of trades, but still I would advise you to paper trade before committing any amount of money into the market if you have no idea what you're doing. All right, now the main reason that I think that Tesla stock is going to soar if Tesla beats earnings, let me clarify. If they beat earnings and record a profit, then Tesla will have achieved 4 consecutive quarters of positive income. That would be a first for an American car company, and they would qualify to be entered into the S&P 500. Now, that is not the only condition for entry to the S&P 500. I did a whole video about this. Check it out here after this video, of course. But it is one of the qualifiers for entry into the S&P 500. Also, with the bulk of the market considering Q2 earnings to be the bottom. If Tesla was able to record a net income in Q1 and a net income in Q2, that would be an insane feat considering the recession that we are currently facing. And lastly, Tesla has received a price upgrade by Piper to 2,300. Now, they simultaneously also received a price downgrade by JPM, but that downgrade target was 1,500, where the stock is at currently. And a couple of trading strategies that I'm going to get into actually leverage this, so you'll definitely want to stay tuned. Now, if you were part of the trading group before March, you would know that we bought Tesla at around $450. We're now up 250% on Tesla, but I realize that not everybody's in this position, so hopefully you find some value in these trading strategies regardless of where you bought Tesla. And if you want to sign up to our trading group, link is in the description below, where I send out all of my options, stock, and crypto plays. A lot of people came into the group without any knowledge of how to trade options and are now comfortably trading options day in and day out, which makes me happy. So sign up. It's a great value. Link is in the description below. And if you get anything out of this video, of course, give it a fat thumbs up. And I'm always interested in hearing from you, so leave it in the comment section below. Let me know how you guys are playing Tesla coming into earnings. And if you are already in Tesla, let me know what was your cost basis. And without any further ado, let's get into these 5 strategies of how to trade Tesla with Tesla earnings coming up. All right, guys, so here are the 5 strategies in how to trade Tesla around Tesla's earnings. The first and most simple thing you can do is obviously buy the stock or hold the stock in our case. As I said, I bought it at around $450 this time around, up around 250%. Now, buying at the high is not the greatest, especially for short-term gains. But I think there are more reasons to be bullish than bearish as it relates to Tesla's earnings. Let's take a look at some of the data and headlines. So based on the earnings per share numbers, Wall Street expects Tesla to lose 14 cents a share on $5.1 billion in sales. But both numbers look stale. So analysts think that these numbers look stale according to what Tesla has been doing in terms of numbers, especially what they reported in the first quarter. There was an earnings surprise there. Now, Wall Street quote unquote whisper numbers, which are the most up-to-date estimates that are being talked about by insiders, they estimate roughly 50 to 75 cents per share. So while officially Wall Street is expecting Tesla to lose 14 cents per share, meaning report a negative income, insiders are expecting 50 to 75 cents per share in positive earnings. And here's an article from Benzinga. If we take a look at the unusual options activity, which is usually a precursor to what the stock is going to do, at least with regards to volatility, it doesn't always predict the correct direction, but it predicts how volatile a stock move is going to do. But if we look at Tesla's option activity, right, we have an open interest of 1155, volume of 607. So definitely increased volume, increased open interest for the $2,000 strike price expiring 7/31. So like I said, the first and most simple strategy is to just buy it. Now, because you're buying at the high, you should expect that you could lose out in the short term, right? So Tesla could actually take a dive if earnings are negative to at least the 21 EMA, which is currently at around 1350. That's why buying the dip or buying the crash is so important, because it avoids you having to make decisions like this where you're buying buying at the high. As Warren Buffett says, I'm more comfortable when stocks are going down, not when they're going up. You essentially want to fade the market. Obviously, this is for the future because Tesla right now is just mooning. And we are talking about Tesla, but you essentially want to fade the market. When the market starts crashing, when people are selling, that's when you want to start buying, unless you have no hopes in that company for the future. So that is trading strategy number one. Trading strategy number two is a little more complicated. This is an option strategy called an iron condor. For those of you that are seasoned options traders, you know what I'm talking about. For those of you that aren't, I'm going to simplify it, so please don't be intimidated at all. Just watch through this and you might learn something, and it might even motivate you to trade options in the future, because you can essentially make money in options regardless of market direction. You can make money if the market moves up, down, or neutral. There's a strategy for every single direction, even non-direction in the market. So Tesla trading strategy number two, how to trade Tesla's earnings. This is actually one that I'm going to be involved in. This is selling an iron condor on Tesla, meaning basically you're selling a short call spread and a short put spread, and it creates this range here, right? And so if Tesla falls between $1,900 or $1,300, then I collect basically $17,400 on 10 options contracts. If we're talking, let's just simplify it and talk about one options contract. Then I would collect $1,740. So Tesla has to remain between $1,300 and $1,900 in order for me to collect $1,740 every options contract. Now, how did I pick those strikes? Well, essentially that is one standard deviation away from where Tesla is at currently. So in Thinkorswim, you can actually do this. I won't go into it in detail because I don't want to make this video long and boring, and I actually want you guys to listen to all the strategies and how I'm planning on playing Tesla, or how you can play Tesla. But essentially one standard deviation away from the current price is how I found those strikes, and you can actually get a decent premium for that option because Tesla is so volatile right now that the premiums are actually really good. Last week, even, we sold a put spread, a ridiculous put spread. I can go, let me go back to it. So right here on July 10th, you could see that I sold the $1,295, $1,300 put spread on Tesla for 57 cents, meaning $570 for every 10 options contracts. That means that if Tesla expires above $1,300, which it did easily, it was, near $1,600, then you get to keep $570. And that's because implied volatility is high. So Tesla's option premiums are high. So going back to this, you get significantly more money, and the range is really wide. It's between $1,300 and $1,900. I get to keep $1,740 per options contract. Another thing to consider is here on Thinkorswim, you can calculate this a number of different ways, but on Thinkorswim, it calculates it for you really quickly. You have a market maker move. So basically, the market is expecting Tesla to move plus or minus $191 in either direction upon earnings. Now, that's a lot, but it certainly isn't one standard deviation away from the current price between $1,300 and $1,900. So we are giving ourselves a really nice cushion here. And if you look at a site like Bar Chart or FinViz, in this case, this is Market Chameleon, you can look at previous earnings and see how much Tesla moved on earnings. So it moved 10% last earnings, 17% the earnings before, minus 13% the earnings prior, minus 4, minus 0.6, plus 9, plus 16, minus 5, etc. So that cushion that I have between 1,300 and 1,900, I think, is a really advantageous one. And again, I'm collecting a large amount of premium for it. Now, it is risky if you don't know what you're doing. If Tesla does blow past 2,000, you're going to have to know how to adjust that, because the max loss on the trade would be 3,260. So you're going to have to know how to adjust this or close it in case anything goes wrong. That's why I'm saying paper trade options until you get the hang of it. These types of opportunities aren't going anywhere. They're presented every single day, and our trading group is really a testament to that. If you take a look at last expiration Friday, you could see how many options we had expire for 100%. Tesla, Domino's Pizza, Vaxart, CVM, Ally, Wells Fargo, all expired for 100% profits. And then we had other ones that still hadn't expired: Facebook, Inovio, JWN, Amazon, etc. So be patient with it. Paper trade. Don't rush it. Don't lose your shorts. All right, trading strategy number 3. an at the money put credit spread. So that would be selling the put credit spread at the money. Why am I saying that? Well, if we're expecting Tesla to go up even incrementally, right, from where it's at currently, then an at the money credit spread only makes sense. Put credit spread only makes sense. And in this case, we're collecting $367 for every single options contract. It would be $3,670 if you're doing 10 contracts. And even if you look up JMP's downgrade, my mistake, I might have said JP Morgan or JPM in the beginning of this video. I meant JMP. But even if you look at JMP's downgrade of Tesla, it's at 1,500. So that's around its current price. It was downgraded to where it's at currently. And like I said, if the whispers on the street are right and Tesla actually does report a positive earnings, then it is more likely, obviously nobody can tell you the future, but it is more likely that Tesla jumps from its current price, which is why an at the money put credit spread makes a lot of sense. And for those of you that are just starting out trading options, I'll explain it briefly. The put credit spread, you're basically selling the higher strike of 1580, which is at the money, because Tesla is currently trading around 1568, and buying the 1570, essentially creating what looks like an S curve. So if Tesla expires even a hair above 1580, it could be 1580 and a penny. You get to keep that entire 3,670. If it expires below 1570, then you're in the whole 6,330. That's of course on 10 contracts. You can bump down the number of contracts to accommodate your risk profile and your budget. But again, this is why paper trading is so important, because you have to know how to maneuver out of this in case the trade goes against you. And if you want to learn how to trade options, I do one-on-one training. Spots go really quick, so sign up by the 1st of the month. Link is in the description, or hit me up and ask me about it. I can only take a handful of people based on the time that I have. Otherwise, you can join our trading group where there is a number of seasoned traders and we all help each other out with strategies, input, feedback, etc. Link is in the description. All right, the fourth way that I'll talk about how to trade Tesla's earnings, especially if you're anticipating a more volatile scenario, is to trade what's called a strangle, buying a strangle. So when you buy a strangle, an option strangle, you're basically buying a put and buying a call at around the same strike price. But what that looks like in graphical terms is you have this graph where if it moves in either direction, then that's when you start to profit, right? It has to move in either direction, and it has to move generally in that direction before earnings. You want it to move in either direction as soon as possible. That's when you profit the most. But this is definitely not a neutral strategy. This is where you are really making a profit by the stock moving in a volatile manner in either direction, especially if you can't guess in which way it's going to go. Because if Tesla does end up missing earnings, then I guarantee you it's going to tank hard. This is a stock that traders have been gunning for. It is the most shorted stock of 2019. It's the most shorted stock of 2020 so far. Traders hate that they keep shorting it, and yet the stock keeps climbing. It's actually very expensive to short right now. Elon Musk even made a mockery of traders trying to short Tesla. So if Tesla misses earnings, you can expect the stock to tank. And when I say tank, I don't mean it'll crash to 500. I talked about this in the trading group, but I do think that Tesla can definitely fall to the 21 EMA, which is where it usually falls to after it corrects. But if it crashes, then right around here where former resistance, we will probably retest this as support where the central pivot line is. So around $1,000 is where I believe if Tesla misses earnings badly, we can crash to $1,000. So that's why for those of you that are, think that Tesla is going to be really volatile, either bump up to that $2,300 target that Piper gave it earlier, or crash down near the $1,000 levels, then, buying a strangle is really the strategy for you, because you take advantage of volatility in either direction. And the last strategy with regards to how to trade Tesla with Tesla's upcoming earnings is a lackluster one, but is one that is tried and true, which is dollar cost averaging / waiting. If you haven't traded Tesla up to this point and it's $1,500, there is really no reason to FOMO at this level, or at least FOMO hard. You can, dollar cost average, which is put in some funds at 1,500. If it drops, put in more. If it rallies, put in a little bit more. But you had all the time in the world to buy Tesla, and it is now $1,500. And money is money. If you made 10% on Tesla or you made 10% trading McDonald's, it really doesn't matter. Money is money. So don't fall into the allure of trading a sexy name like Tesla. Don't let the FOMO kick in just because. If you waited this whole time and you don't own any Tesla, then like I said, either dollar cost average prudently, or you can wait until Tesla retraces to the 21 EMA, because it eventually will. It always does. Every stock does. It's a matter of time. Now, the 21 EMA is obviously a lagging indicator, meaning the higher that Tesla goes, the higher the 21 EMA will go, but at least you'll know that it retraced to a potential buy point, or even the 50 moving average, which is the orange one on my chart. I've done this with several stocks I've missed, whether it's Zoom, whether it's Salesforce or Zscaler. I've done this with a number of stocks. If you miss the boat, sometimes you just miss the boat, and you don't have to be impatient just because you want to be a part of the momentum. So there you have it, my 5 ways of trading Tesla stock around Tesla earnings. Leave a thumbs up if you learned anything or got anything out of this video, or even just like the presentation. Again, leave a comment down below. Let me know how you're trading Tesla. And if you're already in Tesla, what was your cost basis? Let me know. I got in at $450 this time around. I know some traders that bought Tesla at $40 a long time ago. I know some traders that got in Tesla at around $1,000. Let me know your cost basis. Subscribe to the channel if you haven't already. Hit that notification bell. Stay safe out there, traders. As always, peace.